Things could get very interesting for gold. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Here are the leveraged ways to trade gold. You have this one if you are feeling bullish, and you have this one if you are feeling bearish. You see here, as far as the performance goes, the bears, they have been having some good times, but it could come to an end. So we will look at the GLD, which is the benchmark. We will also look a bit at the futures. Here is the one if you are feeling bullish, 2 times bullish exposure, and here is the one if you are feeling like a bear. Okay, first let's look at the seasonality for the GLD. So we are currently in March, which is the worst month for gold. However, as you see, that it gets much better heading towards August. So generally speaking, looking over the last 18 years, the data is pretty clear. We are heading towards better times. If we look here at the GLD, the chart, then there's a moving average that is especially relevant right now. Here you have the blue 100-week moving average. Test, 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 and even here we did have a bounce, but we did eventually break down. Surgical test, 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 test. So I think you can see quite clearly this is an absolutely critical support level, and it can also be a critical resistance level. The key thing is that after the recent pullback, which has been pretty substantial and could potentially even threaten the entire bull run, we do have that key support level. I did expect us to form a cup and handle pattern, but the recent sell-off, it's dire, but there is a support level here. If we look at the futures market, GC, then we see something very interesting. We are now bouncing surgically from that moving average. So there is something happening here. It has worked in the past. And if we go back here to the GLD, as far as the RSI goes, we have, it's very rare for us to get this oversold. If we go to the GDX, then something interesting happens here too. You have the blue 100-week moving average. Now this is the gold miners ETF. Support, 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 support. And here again, we found support here. And it actually is interesting to see that the gold miners have been showing more strength recently than the GLD. Because the consensus is that, the gold miners are, more risky. They're far more volatile, which is a fact. So there's something interesting here that is signaling a potential bottom. So yeah, looking here at the correlation with S&P 500, it actually is quite strong now. It is 76%, but you can see that if we go further back in time, like here, it was much lower. Like here you have a minus 90% correlation between the S&P 500 and the gold. So let's go here to daily data points. So the problem here with the daily data points is that we are below literally all the moving averages. So that is clearly a bearish sign. We have a death cross here with the 50-day crossing below the 200-day moving average. If we zoom back here, you could make the case, looking at the black price line, that there is some horizontal support levels. And you also have extreme oversold RSI. And also, when we look at the PPO here, which measures the distance between price and the 200-day moving average, it's at a very extreme level. Hence, we should certainly expect at least some mean reversion. Given how solid this support level, the 100-week, has been, based on the history, there's reason to cautiously optimistically think that this could be the bottom before a longer term rally. That is if this is a new bull market for gold. if the 100-week moving average does break and becomes resistance, then that would be disastrous for gold bulls. So basically, this is a very critical time. This is one of the most critical times for gold in a very long time. Okay, so let's now look at these leveraged products. So we will change the correlation here to have gold GLD like that. So now I have put the UGL in the foreground here. So this is the leveraged ways if you're feeling like a bull. Long term, we have a 99% positive correlation. That is extremely good. So they do track each other pretty darn well. If you look here at the daily data points, then we have a 99% positive correlation. So basically there's a very strong correlation here between gold, the GLD ETF, the benchmark, and the UGL. Okay, now I have put the bearish one, the GLL, the ultra short gold, in the foreground here, and you can see that there's a long-term weekly data points, there's a minus 99% negative correlation. That is very good. Looking at the daily data points, there's a minus 99% again. So these are the kind of correlations that we want to see when getting into these leveraged products. So all in all things considered, we do have the kind of correlations we want. So let's just change this back to the S&P 500 like that. Okay. If we go here actually to Finviz, you can see that they draw a trend channel, resistance, support. We are kind of slicing below support here a bit, but you see that even here you could expect a bounce. Okay, I do think there's reason to be optimistic long term for gold. My primary thesis for some time is that we have been forming a very huge cup and handle pattern. The recent sell-off, it's a deeper handle on that cup than what is ideal. It is a bit dangerously deep. But these things, they can happen. Sometimes, a trend gets out of control. The bulls that sit on the sidelines, they continue to sit on the sidelines. And the market is actually kind of basic. Are there more buyers than sellers? If there are, the security in question will go up. And of course, the inverse is also true. So that's the key thing. Looking at all the money printing happening in the world, huge money printing, there's good reason to be bullish on gold. The key thing that has kind of distracted attention away from gold is definitively Bitcoin. It has to, and other cryptocurrencies, you can see that it has been significantly stronger than gold. A key distinction between Bitcoin, especially, and gold is that both are, sort of like dissident currencies. The key distinction is that gold has support from the big institutions, the ultra wealthy, the central banks, the big players in the market. They have gold in a big way, and elites have had gold in a big way throughout human history. Bitcoin is a much more recent phenomenon, and it does not have that kind of support. Hence, looking, at the trends, the very long-term thousands of years of history, gold is the mother of finance. Hence, it's much easier to make a very long-term bullish case for gold. And while I am bullish on Bitcoin long term, I do think that the window of opportunity is closing because the central banks are coming out with the digital currencies, and that will become a problem for Bitcoin.